Hello! Today I'm going to show you how to complete a classified balance sheet. So, a classified balance sheet shows a company's assets, liabilities, and equity at a point in time, with each section broken into more specific categories. So this is similar to a regular balance sheet, in that it's going to show us the assets, liability, and equity accounts at a certain point in time. But the difference here is we're going to break each section into more specific categories. So in our case, we're going to be using these categories. So for assets, we have current assets, long-term investments, plant assets, and intangible assets. For liabilities, we have current liabilities and long-term liabilities. And then for equity, we just have equity. We're not going to break that into any further distinctions. And as we go through the problem, I'll define each of these, and then we'll find the balances, or the different values, from our adjusted trial balance. So let's start at the beginning here. We have current assets. Well, these are resources that are expected to be used in the short term. Now, where short term is really referring to 12 months or the operating cycle, whichever of those two things ends up being longer. So if we take a glance at our adjusted trial balance, we'll notice that the first three accounts here are really fitting the description for current assets. So I can go ahead and highlight those. So cash definitely is going to be something that we would use relatively quickly. Accounts receivable is going to be collected usually fairly quickly, and these are short-term investments, so those are definitely going to be included. So we can go ahead and list those on the current asset section of the classified balance sheet. Accounts receivable, and then short-term investments. And then we can total those up. So this is the total current assets, and that's going to be these three numbers added together. Use the sum function, and that ends up being $150,000. So now we can move on to long-term investments. So long-term investments, these are long-term assets not used in operations that are held for investment purposes. So if you have an asset that is used in your operation, something that's part of the actual business, then we're not going to include that in long-term investments. So if we take a glance here, the first one is land, which typically, if not otherwise specified, we'll assume this is used in the business, so we're not going to include that one. Investment in bonds, we're definitely going to want that one. That's a long-term investment. Bonds are usually a long-term asset. The building, we're going to assume that is used in the operation of the business, so we won't include that one. And then we've got this land held for future expansion, so that's also going to fit the bill. And those two end up being our only long-term investments. So we can copy those over. Investment in bonds, and then land held for future expansion for $15,000. And we can total those up. Total long-term investments, and that will be $35,000. Alright, moving on to the plant assets. So, plant assets, these are also long-term assets, but we specify that they are tangible assets that are used in operations. So tangible meaning that they have some kind of physical presence. So looking back at our adjusted trial balance, we see the land here, which is definitely going to be used in the business. So we can highlight that one. We have the building and the depreciation on the building. Those are also going to be long-term plant assets. And I believe those are the only three accounts we need to worry about. So we can copy those down. And the accumulated depreciation. So that accumulated depreciation needs to go in as a negative because it has a credit balance. As you might remember, accumulated depreciation is a contra asset, meaning it has an opposite normal balance of what assets normally have. So that's going to kind of offset the balance of the building. It's kind of keeping track of how much we've depreciated the building so far. So it's going to be negative 5,000. All right, we can go to the total plant assets, and that will be just adding those three numbers up for $125,000. Next, we move to intangible assets. So the intangible assets, these are long-term assets which provide value through the privileges or rights granted by the holder. So this is different from the plant assets. These were also long-term assets, but these ones are going to be intangible, meaning they don't actually have a physical form. And they only provide value through the privileges or rights they grant to the holder, such as copyrights or trademarks, or in this case, a patent, meaning they've created some product and now they have the exclusive rights to produce it. So we can copy down patents for $10,000, and then we can total up all of our assets by summing everything in the total column, and that gets us $320,000 of total assets. So now we can move on to liabilities. So first we have the current liabilities. And these are obligations that are expected to be settled in the short term. Again, where short term is the operating cycle, or 12 months, whichever is longer. And in this case, the current liabilities are going to be accounts payable and unearned revenue. So first we have accounts payable, meaning short-term debts that we have to other people or other companies. And then we have unearned revenue, which is where we've collected some cash for some service or good we're going to provide in the future. All right, we can total those up. This will be total current liabilities, which is 50,000 plus 12,000 is 62,000. And then we can move on to long-term liabilities. So these are obligations that are expected to be settled in the long term. So very similar to the current liabilities, just change one phrase here from short term to long term. So these are going to be longer than 12 months or the operating cycle. And in this case, our one option is the long-term notes payable. So let's choose a color here. The long-term notes payable, these are like long-term loans, and that's for $100,000. And then finally we have our total liabilities, which can be the addition of these two numbers, meaning our total liabilities are $162,000. So finally we have the equity, which you should be familiar with, is the owner's claims on the assets. And for right now, we're just thinking of this as the retained earnings and common stock. So looking at our information here, let's pick a color. We see we've got common stock right here for $150,000. And we've also got retained earnings for $4,000. But don't get tricked by using this one. This is actually the retained earnings before it's been adjusted for the income and the dividends. So this is from the adjusted trial balance, meaning this is before we completed the financial statements. So what we're going to have to do is we're going to have to update this value of retained earnings. So first of all, notice there are no dividends, so we don't have to subtract any dividends. We just have to add the net income. So the new balance of retained earnings, well, that's going to be equal to the old balance, which is 4,000, and then we're going to have to add the net income. But remember, income is just revenues minus expenses. So I can just add the revenues and minus all of the expenses. And then we get $8,000 as our new balance for retained earnings. So that's going to go on our classified balance sheet for $8,000. Then we can put up total equity, and that's going to be the total of these two numbers, 150,000 plus 8,000. And maybe I should finish highlighting these for consistency's sake. And I'm going to highlight all the revenues and expenses because those kind of were needed to go into retained earnings, even though they weren't listed on this section of the balance sheet. So we got the total equity at $158,000. And finally, we can find the total liabilities and equity. And that's going to be equal to $158,000, the total equity, plus $162,000, the total liabilities, and we get $320,000. So that's good. That's the same as our total assets. A good way to check your answer. All right, we have finally finished our classified balance sheet. So again, these may not be the exact same titles that you're using in your class, but these are the most common ones, so that's what I've used in this video.